Happy holiday week, everyone. This is Craig, the options linebacker, and this is the weekend report for Sunday, December 27th. Well, here's my bottom line for an outlook this week is that I think we're likely to push higher as we go through this week for a lot of reasons. This is a typical Santa Claus rally that we're seeing. If we look at the last couple of years on the S&P 500, we've seen this type of rally occur over the last week or two. Here's 2007. And here's the end of 2008, nice little rally before the drop. So we're seeing the same kind of thing as we look at last week and probably going into this week. Again, likely a push higher throughout this week on very light volume. It's very easy for fund managers, if they want to keep things propped up. Now, with that said, there probably will be some profit taking as we get into the new year. Well, let's take a look at and see why we're seeing this on the indices. First of all, the NASDAQ is really leading the markets higher. And what we've seen over the past 3 months is we've seen a consolidation pattern, which I'd have to say this looks like a rising wedge pattern, but if you really look at it hard enough, it's probably more of an ascending triangle pattern, which is bullish. So ascending triangle pattern is bullish, ascending wedge is typically bearish and falls out to the downside. So we can clearly see which way it's broken from here. Really interesting thing about the NASDAQ is when we look at the longer term charts and look at the bear market that we've had since 2007 is that the NASDAQ never made a lower low compared to the year 2002-2003 bottom. So really, in the NASDAQ, this is just more of a sideways consolidation pattern. And as we get to the weekly chart, what's interesting here also is that the price is now above that 61.8% retracement. Once a chart gets above 61.8% retracement, the odds have increased for it to fill up the entire triangle. So this would be a phenomenal move to see the NASDAQ go back up here to 2007 highs up to around the 2600 area. Now, we've been saying for a long time that this is probably not going to happen, that charts can't go in a straight line like this, but again, you can't argue with this 61.8% retracement. So we'll see whether or not this is just a little pop up here to explore that area on very light volume, or whether we have to take this seriously. It's not just the NASDAQ. We also have the S&P 500, which has been consolidating in a sideways pattern for about the last 6 weeks, has finally popped above that pattern, starting to do so with a series of higher highs and higher low closes on the daily chart. So it's working its way higher and has been for the last couple of weeks. So this could be a powerful breakout. Right now it's just poked its head above the big time 50% bear market fib. And of course we have the Russell 2000, which is now breaking above resistance. So after making a 5-wave pattern to the downside, it has now turned around and has started making a wave 3 pattern to the upside. So to some extent, we're kind of stating the obvious here. We're seeing the NASDAQ, the S&P 500, and the Russell just completely moving to the upside right now, all working in harmony. What's the problem with that? Why do I think that markets might be heading lower in the near term? One of the problems that we're seeing is the market internals. So if I look at the daily advancers on the New York Stock Exchange, we're making higher prices on lower number of advancing stocks every day. Now the other thing that we're seeing, and this is the S&P 500 here, is that when markets break out of coils like this, when they coil up and generate a lot of energy, a lot of times the initial break out of this coil is to the wrong direction. So we've seen many of these in the past where it breaks out to the wrong direction, goes above the Bollinger Bands, and then get pulled back down, back inside the pattern. We've seen it again and again and again. Every time we break out above here, it gets pulled back inside and then breaks in the opposite direction. Now it's not to say we may not be going higher throughout the early part of 2010, but we are currently outside the bands right now and may continue to be so as we go through this oncoming week, and it will put the price charts in a very precarious overbought condition. The other thing we're seeing is that we're now apparently in a rising rate environment. This is the chart of the dollar, and it's broken up above a couple of different pivots and looks to be showing strength. It retested that pivot from above the other day, and it looks like, regardless of the government trying to print our way out of this mess, is that rates may rise, and what that's going to do is to put a little bit of negative pressure on the stock market, because if you're starting to see rates increase on your treasury notes, that's not a bad place to put your capital. Instead of, when it's down here at 2.4%, that's a lousy place to put your capital. Does not keep up with inflation at all. At least when you're up near 4%, you've got half a chance. Starting in March of 2009, stocks had no competition for the investing dollar, and now they'll start to see a little bit of competition as other instruments come to play on a rising rate environment. And I'll finish up today's video by showing the P&L graph of our current delta neutral Iron Condor. We run delta neutral condors as well as the technical analysis based high probability Iron Condors, where we're selling them much further out of the money. So on this current delta neutral condor, we're doing very well right now. You can see the green line here is the expiration day P&L, which we try to manage to, and the white line here is the current P&L. So the price is just above, right now here's the current price, and it's just above the profit peak. And here's my current delta reading right now, so that's showing our current delta risk, and that's the number that we use to manage these positions. So we keep things very objective. If you want to know more about how we manage these positions through using the options Greeks, come join us at our daily newsletter at optionslinebacker.com. Have a great week, folks, and we'll see you next week with the top 10 lessons of 2009.